Hi, Tim Biggam for Delta Derivatives, Option Hedges and Edges. Taking a look at a market that appears to need no downside hedging here as we're ripping higher again today out of some, I guess, good news out of China, where certainly China is probably going to be adding some more stimulus to what has been kind of dismal numbers coming out of there. Certainly the numbers that came out yesterday were really, really bad. So for the time being, that Powell put that we saw come in place is outweighing any of the kind of bad economic news recently coming out of certainly China and even the U.S. here. Certainly earnings at the forefront as we head full force into earnings season. Banks not looking so great. JP Morgan came out with, again, some bad numbers today. They missed on EPS, first time in 15 quarters. Couldn't even do the usual pull forward, to grab out of the piggy bank to manufacture a beat here. Trading revenues way down, with the Fed now pretty much sitting on their hands on interest rates. That NIM, net interest margin, certainly won't be adding to the bank's bottom line anytime soon here. So I think this rally with risk on is getting a little bit overextended here. We have the VIX at the lowest levels we've seen in a while, finally back with an 18 handle. So I'm just going out buying the SPY February, slightly out of the money, 257 puts, selling this week's 254 puts, doing a put diagonal, paying about $3.50 for that. Got plenty of time other weeks in between to sell additional premium. That 260 level, 2,600 on the S&P 500 cash, 260 on the spiders. Certainly a major resistance level. We're right up against it. So I think we either break out or break down. If we break out, I can move up that short strike. If we break down, we're positioned for that pullback. I like to be long vol longer term, short low vol shorter term. I think the Powell put will begin to wear off as earnings come to the forefront. Otherwise, I think value is the way to go here with a little bit of yield for 2019 is my thing. I think growth has probably seen its heyday here, given the fact we're just seeing slowing growth not only out of China and the emerging markets, but starting to hit home in the U.S. here as well. So I think hunker down with some decent solid growth, some decent yield, the Coca-Colas of the world, the Procter & Gamble's, more the Warren Buffett names. So until next time, as always, here's the good trading. Take care.